folks, if you think that only those people who have knowledge about finances and stock markets can actually make money, think again. Here is one such individual who had a job by day but also managed to invest her money in such a manner that it side by side worked for her. Here's marketing consultant Supriya Jain, who's joining us on the show to tell us about her financial journey. Supriya, thanks so much for joining in. You're one of those few examples out there who've managed to create a good amount of wealth for yourself using mutual funds. Why don't you start off first by telling us a bit about yourself and your background?
So, I'm actually an engineer who then went on to do her MBA. And I spent majority of my career in the IT space, and then a bit of marketing for B2B companies, etc. So honestly, I don't really have this whole financing and investing experience by myself.
Okay, so Supriya, how did your investing journey start then?
Sure. So I think I started investing from the first time I got a job, which was in 2007. I come from a middle class background, so saving was a very important aspect of the whole cultural integration. That you have to save, you have to get your own house, you have to save for your children's education and stuff like that. So the first time I got a job, I started investing in those tax saving mutual funds, etc. And that was in 2007, and it was a bit of an unstructured approach to investments, where I just did the NPS, a bit of ELSS funds, a bit of life insurance here and there, and ULIPs. So that's where it started.
Okay, Supriya, you're of course an engineer, so you obviously may not be having as much knowledge about markets and finance as opposed to, I suppose, machines and computers. So where did you get your information on where to invest from?
I think that's something that organizations help you with, because at the end of the year you have to submit tax proofs and everything, and they sort of make it mandatory to put those funds in ELSS, etc. So you save on tax. That's where the first thing came in. But of course, there was, I come from a Marwari background, so there's a lot of investing happening back at home. So you do have an idea that yes, it's important to save a bit of your money. But like I said, it was very unorganized and very spur of the moment kind of a thing. If friends or family said this is a good place to invest in, then we would just do that.
Yeah, and I suppose that a lot of individuals do rely on help from family and friends and, hearsay, and that's, I suppose, not, the best thing to do. Now, Supriya, you mentioned earlier that, savings was in your DNA of sorts. So how much, ordinarily you would ensure that you would save and keep aside?
I think the formula we were given was, save 70% and spend 30%. But when I did start saving, I think it was just a bare minimum of 1.5 lakhs that you needed to really, put aside for tax purposes. But that's the only amount that I saved at that point in time.
Okay, so Supriya, I know you then finally went to a financial advisor. What made you want to approach a financial advisor then?
Actually, as you grow up, right, when I got my first job, I was more of, just out of college, and I wasn't very sure where I was going with my money or my life goals. But as you grow older, I guess, you realize that, there are certain life goals you need to work for, that at some point you'll get married, you'll have children, you'll need a house, you would probably want to travel, and ultimately you'll retire. So then, when you look at how the inflation goes up and the cost of living goes up, you're like, what, the money I'm making and saving today is probably not enough. And then you decide that probably I need an expert advice on managing my money so that they're able to meet these life goals for me, which I probably, because as a normal person, you don't really know about markets, and you really need to have that insight into where my money is going to grow. And I think that's when I decided that I really needed some expert help to get there.
All right. Now, what are the key changes you made in your investments? When you started off, like you mentioned, it was a bit unorganized. You were just doing that basic ELSS. And now, what does your investment portfolio look like?
So I think one of the things that has happened since I've got my financial advisors Wealth on board is my investment is a lot more structured, and they keep tabs on a certain amount that I have to invest every year. So now every quarter we sit down, we plan for the goals for that particular year, we see whether there's been any change or not, and then we try to put our money into liquid funds or into equity or in long-term debt funds depending on when I'm going to need that money. So that's a very structured approach that has come in because of these guys. The other thing is also I was unaware of certain things earlier. There are lots of different types of investment instruments, and there are a lot of different types to make your money work for you, which is where Wealth has also helped me. So for instance, I'm a single mother, and there are things that you don't think about, right? Like a critical care policy. What happens if I fall sick? What happens if I'm out of action for a month? Who's paying my bills? So they made me buy a critical care policy that will contribute over and above the medical expenses to my monthly expenses as well. And that was something I wasn't even aware of. So I think the awareness has grown, the structure has grown, and of course the rate at which my money is growing has also improved significantly, because now there's an actual analytics that goes behind where to put your money.
Okay. Supriya, do you think now, since you've consulted a financial advisor as opposed to 2007 or even for that matter 2014, do you think there's a visible change in your relationship with your money, your lifestyle?
I think yes, definitely. So I could probably give you a personal example. My son was born via surrogacy, and we all know that IVF and surrogacy are very expensive procedures. And I wouldn't probably have managed to pay for them if I didn't have this backing from these guys. I told them I'm going to do this and I need X amount of money to be paid in installments over a certain amount of time, and they made sure that that money was available. So I think there's a bit of a relaxation that's happened, where I know that if I need something for a particular goal, these guys will make sure that it's available. And also it's helped me take some risky life decisions, I would call it. Like I quit my job and I started my own business, and I probably wouldn't have been able to do it if I didn't have that backing that, okay, I have some money in savings that's going to be a cushion for me to fall back on. So I think that's really helped.
All right. Okay, that's great to know. So what are the key lessons you've learned then in your investing journey of almost 12 years now, Supriya?
I think one of the things that I would do is I would get a financial advisor on board immediately, because I think in the initial years I didn't know the market, and I think when I started investing, the crash happened in 2008. So it was a very difficult and confusing time, and I really didn't know much about the financial markets at that point in time, being fresh out of college and everything. So now if I were to go back, I will tell my 2007 self that go get some expert help, and I probably would have a larger portfolio by now.
Okay. And your advice for other individuals who've just started with their jobs, would like to create a corpus like you have?
I think the first thing is to make the right financial decisions. A lot of times there's a lot of misinformation out there when it comes to financial instruments. So an important thing is to understand what you're investing in, and then take into consideration your risk appetite. And the younger you are, the more risk you can take. So do you want to invest in equity or mutual funds or debt funds? So understand your risk and reward ratio. Make sure you understand the instrument that you're investing in, and then at least invest 30 to 40% of your income into that.
Okay. Thanks a lot, Supriya, for that. Well, there you have it, folks. If you think that you're not in the world of finance and you hence won't be able to make money in the markets, well, think again. We've given you a live example of one such individual who's managed to sit on a nice, neat corpus of money by slow, systematic investment.